The fact is that the Fed is doing a fantastic job of trying to create liquidity and provide a bridge, but they're not doing it for every company. In fact, companies that started out as junk, that weren't just recently downgraded, aren't part of the Federal Reserve's programs, could be part of the Congress's fiscal program. But one of the major trends that we saw early on, especially in the first rebound, was all about quality, and we're seeing it today. We put together what we call internally our belt and suspenders portfolio among the largest companies, with strongest balance sheets and high cash balances, and those are the ones that are still gaining a lot of the share these days.
So I can well imagine, before I turn to Kathy for a comment here, I can well imagine that there are viewers out there who are saying, okay, he just said that some holdings are junk and are going to go away, are going to go to zero, I'm going to be wiped out. Where am I likely to find them? I know where the quality is. I know where the fortress balance sheets are. Where's the crap? Where's the garbage?
Sure. So generally it trails along with size of smaller companies that may not have unfettered access to capital markets, and we're seeing that among small caps. I mean, the Russell 2000 has gotten hammered. They're coming back, but I do think, and one of the things we told our clients was, while I've been a huge believer of passive strategies for years, now is the time to really switch to active management. Allow a manager to go in and look at, trying to discern the winners and losers through this, because we're going to see low quality companies, but in the energy sector, in a lot of the consumer sectors. I mean, already we're hearing, the AMC movie theaters. Not sure how they're going to get through all of this. So there are, like when you see this kind of a downdraft and this kind of an economic, crevice, there are going to be companies that just don't make it to the other side.
So, Kathy, you say that the estimates of second quarter earnings are on average down about 25%, some of them as low as off 45%. Has the market discounted that steeper loss probability adequately or not?
I don't think that they've discounted it yet, and that's sort of one of those things that we have to wait and see what happens. I would agree with Jack. I think it was Warren Buffett that said when the tide goes out, you can see who's got their swim trunks on and who doesn't. And I think right now it's a time where we're going to figure out who has the ability to succeed going forward and who's pivoting and who's just sort of sitting by and waiting. You can't just sit right now and wait for this to pass. Any company, any leader needs to take action and do things that help the company position well for the new normal.
So if I'm an investor, Kathy, what should I be doing? I mean, Jack says look out below in some less than fortress balance sheet smaller caps. Look out below in certain challenged sectors of the economy. What do you say about how, if you say I can't just sit here and do nothing right now, what is it that I should be doing? What should I be pruning? What should I be inching into?
Absolutely. And I think those are great questions, because one thing that we find is we need to do something. There's something about feeling like we're making decisions and we have some sort of control. And if we can control the things that we can, then it feels better. So some of the things that we're doing with our clients is we're upgrading quality of holding. So to Jack's point, if there are areas of the market that we think that aren't as favorable, or companies that are not going to continue to grow, then we're going to upgrade those parts of the portfolio now. We're going to try to book losses, tax harvest for clients. A lot of the portfolios are down right now. They're paper losses until you actually sell. Once you sell, you're booking a loss that you can carry forward and use against future gains. I think that's a great strategy. Also, we're up a little bit. I think last week, 4 days, we were up 12%. It's a great time to see what you don't own anymore and start peeling back there, because everything seems to go, up and down at the same time. So, yeah, in terms of small caps, to Jack's point, professional management, having, professional managers oversee that part of your portfolio makes sense.
Let me get one more quick question in for Jack, and a quick answer if you don't mind, Jack. I see you like what you describe as quality energy. What's quality?
Yeah, I mean, look at ExxonMobil and Chevron, both AA. I think even one of the rating agencies has Exxon as a AAA rated company. So they're suffering a downdraft with the energy market, but they're definitely going to survive.